Welcome to the compound journey, everyone. It's been 2 months since I started my dividend portfolio, and a lot has happened since then. On October 10th, President Trump announced an additional 100% tariff on Chinese imports, set to take effect on November 1st. This comes at a point where inflation is still running a bit hot. Markets reacted to the news with the S&P 500 falling around 2.9%. On top of that, the government has now been shut down for 18 days, marking the third longest shutdown in US history. In this video, I'll give you a full portfolio update and break down what these tariffs and government shutdown mean for investors, and how they're shaping the way I'm making decisions with my dividend portfolio. So if you're new to this channel, this is my actual dividend portfolio that I'm building from zero. Right now, I'm 100% invested in SCHD as my core holding. So far, I've invested $400, and I've already received my first dividend. It wasn't a big amount, just $2.85, but it's money I didn't have to work for. This is just the first of many. Over time, those small payouts will keep growing and compound into something much bigger. As you can see, the portfolio is currently down right now 2%. A big reason of that is the market's reaction to President Trump's announcement of the 100% tariff on China. On October 10th, President Trump announced that the new tariff will take effect on November 1st, bringing the total rate on Chinese imports to roughly 130%. This move is in retaliation to the new export controls Beijing is planning on valuable rare earth minerals, minerals that are critical inputs for products used across the technology sector, such as semiconductors, the same technology that's powering the AI boom. These restrictions would make it harder for Chinese companies to export products that rely on those minerals, and the US response has created a wave of uncertainty across the markets. There's concern that these additional 100% tariffs could add inflationary pressure for US consumers, potentially leading to a higher for longer interest rate environment and slowing overall economic growth. And the markets reacted immediately to this news, with the S&P 500 falling around 2.9% on October 10th. How am I responding to all this? In my opinion, this is President Trump once again using tariffs as a negotiation tool. I do think he understands how vital the rare earth mineral trade is for the US, especially since these minerals are key inputs for semiconductors and GPUs, the same technology that's needed to train and build AI models. China's export restrictions are, in my view, an attempt to gain leverage by controlling that trade. I do think it's entirely possible that between now and November 1st, the US and China reach some sort of agreement, which could send markets moving in the opposite direction. In fact, President Trump himself has said that this tariff isn't sustainable for the US and that he plans to meet with the president of China sometime before November 1st to discuss a potential deal. With that being said, I do think it's also a very real possibility that the tariffs take effect as planned. And I think if that were to happen, the markets would react negatively. Either way, my approach stays the same. Stay consistent, keep investing, and focus on the long term. SCHD isn't a tech heavy ETF, so in a scenario where these tariffs remain in place, I actually expect it to outperform. In other news, this current government shutdown has now become the third longest in US history. Congress is still deadlocked over the new spending bill, and until they reach an agreement, large parts of the federal government remain closed. Shutdowns don't usually have a huge effect on the markets, as investors expect that Congress will eventually come to a deal, but the bigger effect right now is the lack of economic data. Key reports like jobs, inflation, and consumer spending numbers have been delayed, and that leaves both investors and the Federal Reserve with less information to base their decisions off of. Overall, the shutdown isn't a big concern for me personally. I anticipate that a deal will get done soon, and once that happens, we'll start to see those key economic reports. So that's where we stand right now. My dividend portfolio is off to a steady start. I've already received my first dividend, and while the portfolio is down right now due to all the recent economic news, that's just part of the process. There is a lot happening, especially with the new tariffs on China, but that's exactly why staying consistent matters. I'm not trying to predict short-term market moves. I'm just investing every week and watching my portfolio grow slowly, one step at a time. If you found this helpful or interesting, make sure to subscribe so you can follow along as this portfolio grows week by week. Until next time, thanks for watching The Compound Journey.